team.
All right, ladies and gentlemen, welcome back. It is Monday, April 17th. We got another chart talk coming at you. We got a pretty slow day at an S&P, but we're marching towards these 2023 highs. S&P has been uptrending the past 3 weeks. We're getting to the top of this channel. Things are looking pretty good in the short term. Now, obviously, we have the slew of headlines of there's the fear of the recession that has gone nowhere. We did get CPI and PPI data, which we spoke about last week. We saw the CPI move lower for the 9th month in a row. However, that's going to be in jeopardy next month with energy blasting off this last month. But, that's something we'll talk about in a few weeks. And really, I'm very excited. It just goes back to earnings season. We're in earnings season. It's finally starting up this week. We get to focus on individual companies' earnings the past 3 months. Now the theme last quarter was it wasn't as bad as expected, and companies moved higher off not delivering really poor results, a little bit better than expected. So now we're up for the test. And the first two that were up were JP Morgan, Citibank, Wells Fargo last Friday. They all look pretty good so far to start. So we're going to see some more bank earnings this week. The big banks, and what's going to be interesting is those regional banks, Bank of Ozarks and the smaller banks, especially after the Silicon Valley banking crisis. From there, I think we got Netflix tomorrow night. We got Tesla after the close Wednesday or Thursday. We got the airlines reporting, the railroads reporting. So this week is a big week. Starts off, and then next week we get, I believe, Microsoft, Apple, Google, and those guys. Mm-hmm. So we're ramping up. And finally, we get to talk about individual companies again. I'm so sick of talking about the macro environment, all these things everyone's worried about these same headlines. Everyone, it seems like everyone's worried about the same stuff. And there is a record amount of money, two things, on the sidelines, which is good for the market, and two, short. There's still a record amount of money short and hedged to the downside with options, which is only fueling this market to go higher. It's a contrarian indicator. If you look at the put call charts or the amount of people buying further dated out puts, it's generally a contrarian indicator. And those numbers being at highs, meaning the highest amount of people are invested in puts, the highest amount of people are getting paid if we move to the downside, likely means, we're in no hurry to move to the downside. So that's kind of my spiel. Let me bring up the S&P here to kind of bring the charts into the picture. You got the S&P up online?
Yeah, we can see.
All right. So, very simply, we've grinded higher, but, we're at the top end of the range. So this yields caution. This is the S&P 500 here. I'm going to bring the Qs up. Now, the Qs, this is where all the strength is because we're seeing, the Apples, the Amazon, not Amazon as much, but we're seeing this, Apple's trading around highs. Google's doing pretty well. And then the real beast, NVIDIA is trading up at highs. Tesla, huge run off those 2023 lows, still consolidating here. But it's those type of companies. Oh, Microsoft's been killing it. These guys are all leading this market higher. And, it's been a big battle of the haves versus the have-nots. You take a look over to IWM, the Russell 2000 small caps, they're at the lower end of their range. These guys are the ones who struggle, the guys who are long-duration assets who need, high growth to make money. Those guys get hurt with these current economic environment with inflation and just economic contraction and things like that. So overall, some strength in the market, some weakness, focusing on the relative strength. You're having a great year. If you're just walking in every day here bearish, you're very frustrated. I had to give that bear hat up a few weeks ago, and it's been great ever since. I'm still trading to the downside when it calls for it. I'm still shorting things. My best trade today was a short, for example. But overall, a lot of back and forth trading, very stock by stock specific. There's going to be longs out there. There's going to be shorts. Simple as that. And I'm very excited about this earnings season. All right, that's enough out of me. Bennett, what do you got for him? Let me stop sharing.
Yeah, you really touched on a lot, so I'll touch on a couple of sectors that you did not mention. Again, with the Dow 30, and you mentioned the SPY being very strong, broad index being very strong. Dow 30 up near major resistance in the channel it's been in. So this is one to kind of proceed with some caution after the run up it's been on. It's up nearly 10-15% last month or two. So up here is when you really want to be a little more defensive if you have any swings in those names, where if it does start to roll over back within this range, you can still take some profits. We did see some interesting action at the 10-year, just continuing this megaphone pattern. The
nice call you had, that you said that was the low, and it was the low. It was a good call.
Yeah. Again, still not. We're starting to slowly see. I don't have the mortgage on here. The 30-year rates still haven't really dropped much. They're still up here, like in the sixes. I'm really waiting for this like 6% area to break, and then you'll see that quicker drop down to 5. But that's again as we continue to see this megaphone pattern form. And again, in the short term, you're going to see these bounces within this range, but we should see lower prices, especially as now they start to whisper at like the Fed going to start to drop rates next year and things like that. But with some of the major sectors, go back to this for a second. Again, a lot of strength out there. Again, healthcare running into major resistance. We saw consumer staples again on a major run. You were talking about this last couple of weeks. That focus on the consumer staples sector. We've seen a phenomenal run of that sector. We've seen it in telecom. We've seen it in tech. We've seen it even in the biotech. So a lot of strength out there. There really isn't much that's very weak or like is it a dramatic void. Most seem to either been running into major resistance or they're just setting up within their current base. So you have like the REITs that are, there's next entries through this little base area that's been forming. We saw the same thing in consumer discretionaries. Again, financials starting to break out of its recent base. We saw, like you mentioned, some very strong of the bigger bank earnings. So maybe that fear of the Silicon Valley drama is starting to subside and move away from that. But a lot of kind of healthy action. You don't want to chase the extended sectors. I think right now, I think we need to see these consolidate versus expect these run-ups to just kind of continue. So that's it on my end from the broad market. A couple of names keeping an eye on. Again, this OPCH still waiting for this 32 seller to leave the party. It held all last week to the penny. Still have a stop versus 31, which is still held. So again, within this very tight $1 range. Earnings coming up, so I'll be out of this before earnings does get released. A couple of names on the radar. We have this PODD, almost retested that all-time high day at 326 area. Did not get traded in, luckily.
You didn't buy it yet?
No,
I'm in that right now. I bought a little bit today.
Mm-hmm.
It had really strong opening volume.
Mm-hmm.
And it's just been kind of fading right now. It's kind of trading around my price. I'll probably get out of a chunk for the close and re-enter if we see that strength and volume come back. Yeah. I love that one. I love that one.
Kush was looking at the 320, which I thought was like a great spot for it. I just didn't want to rush into it.
He tried to call me out in the chat today. Tell him if he ever does that again, I'm flying out to wherever the hell he lives and spanking him in the middle of English class. All right. Just make sure he knows that. I didn't even address that. I'm like trading 15 things at once. He comes in to chime in, just be like, "Oh, Shake, you're trading my ideas." Like everyone in the market is looking at this top right chart. Bozo.
Anyways, so again,
I digress. I mean, geez, we're all trying to make money here. It's like
keep an eye on this PODD, MYG. And again, we talked about this kind of last week, and you were highlighting like look for that support buyback in it, and I'm with you on that. So again, expecting this 22 to shake lower first. I don't expect this to hold perfectly, but if it does, tick below 22 and wherever it watches out to, it does. But that support buyback could be back up through 23 versus that 22 area for now. And again, we've all been keeping on this EXAS, whether you're looking to buy 68, whether you're looking to buy 69 or 70, this seems like a very textbook flag. Again, not top right, but in a, middle of its overall range, relatively speaking. So still looks pretty good. So those are, very, small watch list for this week. There hasn't been like a million ideas, just given some of the run up that we've seen overall. That's my little piece there. Shake, you have any good ideas you want to talk about?
Yeah. Let me share. All right. So first up, we got this Lulu. Lulu got the earnings power. Huge gap up on earnings here. We want to see this sideways consolidation. We want to see these moving averages catch up, and then it will blast off. I know it looks overbought right now. You head over to a weekly chart, it's just a massive flagpole. That's what a lot of people often miss with earnings power. Right now, it's not ready yet. They had some news today, got some volume that they're looking to sell the mirror, the fitness thing. They bought that in 2020. I don't know if that's true or not, whatever. But they got the earnings gap up, holding the gap, very bullish. The more sideways we get here, let these moving averages catch up. That one looks good. This is my trade of the week today. This IoT, this thing is a beast. I only got like quarter of a position. The Internet of Things. That's what IoT stands for. So they work with like fleet management, like cars. It's just all like computerized robotics type stuff. So through this 2025, this thing exploded. I think this one can have some serious legs up to, retest this 24, 25 area. Talk about that Lulu. Arc, huh? Arc is ready to bust. This is looked similar to PayPal we were trading last week. But this arc looks really good. If you can get above this 40, it's all these moving averages are consolidated. It'll finally be trading above the 200-day simple moving average. Wakes up out of this consolidation. That one looks really good through 40. This INTU into it. So we see a couple weeks ago broke higher out of this base, and now it's just giving us that secondary flag to kind of launch pad. So through this 445 from 46 area, that one looks really nice. Where we at? MU. I'm surprised you didn't touch on this MU. MU looks great. MU, really nice base below the 6450. And these are names that have earnings out of the way. So this has 3 months to just flag out and take that out. Wait till 6450 on this one. No need to start early. This one looks really, really good for a base breakout. It's just it's been consolidating in this base since June 22. 10 months of consolidation. That's amazing. And now it uses earnings to gap up to the level, gives us a nice little daily flag for a tight entry. That's just time frame continuity there. Looks good on the daily, looks good on the weekly, looks good on the monthly. That's overall just good stuff. You touched on the EXAS. I like that too. You touched on that pod. I like that too. Last one. I think this is kind of a can't miss setup. Costco, huh? Look at this wedge.
What I know. It's been...
And they're still selling dollar hot dogs. I fucking love hot dogs. So right now it's looking like 505-ish through those last recent pivot highs. Could be a trigger. They just had earnings. What is that? March 2nd. So they're good. They don't have earnings till August, it looks like. March, January, February, March, April, May, June. No, that doesn't sound right. I don't know. I got to look up these Costco earnings. Regardless, this wedge, if it breaks the upside, it's going to be 600, 4 months later, 620. This is one, it's like a complete macro setup where you want to be in this one, you want to give it room, and you want to be in it for the length of the move, because it's just, sellers are wide, buyers are wide, sellers getting thinner. And then, once they match up, once they finally meet and one side wins, it's going to create a huge move. I'd rather it break the upside. I'd prefer to swing to the long side. But we'll see. Open mind. If this market just reverses course here to the downside, it could be a great short. But still up in the air. We'll see. I'd rather trigger it to the upside. But that's really it. We're gonna have a ton of action, ton of setups coming earnings season. So lots to look forward to. A lot of action coming. That's really it. We have a lot of news coming as usual. Not economic news, just company specific news, which is great. Can't wait.
Short and sweet. All right, guys. I think we wrapped it up.
Right. All right. With that, catch you guys next week after we get all these earnings. Keep it locked. Like, subscribe, comment, all that good stuff. And we'll catch you guys next week.